Okay, I just finished discussing the macro overview of crypto, risk assets, equities. You know, they all of that stuff falls under risk assets. And so I've already discussed why I'm expecting a pullback, and I can go a little deeper on it. Let me just get rid of all this bullshit. I'm gonna keep the trend lines. So now I'm gonna zoom in pretty hard here. So this is pretty much the impulse that we've been working with. It's actually, damn, this shit big as hell. Okay, there we go. That's a lot of time. So let me pull up the Elliott Wave Theory. Ooh. What we're working in right now is this correction down to mark the wave 2, and perhaps it's already done. This could be the wave 2. And if that's the case, then the longs will print and the shorts will get destroyed. So here's the two options that we have right now. Number one is this completed correction, where we're gonna see a move up to mark a 5th wave, and then we get this move down, a corrective move down into the GP of the move, and it could be a 786. It doesn't have to be a GP. It could be the 382. Let's get the trading retracement out. Nah, it's kind of ugly. So this could really terminate anywhere. It may be wise to long all of the pivots that you see, right? We've got the first one, and since these are swing moves, you can kind of get away with a much larger stop loss. So this 382 sweep of the low right there, which you could see that I already have the path drawn out, considering these swing these levels of interest, because that's just how I look at the chart. I don't just draw lines willy-nilly. I try to make sure that they line up with high confluence targets. So there are some trend lines that may be useful to move this point on forward. So price is already bouncing at a pretty interesting level, and I haven't marked on this long that I have taken, but we'll discuss that later. We're waiting on this wave 2, and it may end right there. And so when we take a long right here, it is wise to take profits right there, just because price could extend further into this wave 2, into this larger C leg, right? Because it could just be an ABC, boop, just like that, and it's done. Or it can be a much larger ABC to the downside towards the 618 or the 786 into a trend line bounce, boom, and we're out of there. That would lead to wave 3, and it would be a wave 3 of a wave 3, and it's going to be a massive one. So you don't want to miss this one, frankly. I will say it's quite difficult to count this as an impulse, but it works. And so because of that, this is a very valid structure to pay attention to. You can see that we're rejecting perfectly off the 618 of the entire range. Let me just cut that short. You see this? There's a swing high right here. It was a failure, swing failure of the GP. This is like one of my favorite setups on the planet, and they work all the time. And so I'm short from this position as we speak. I will show you what that position looks like right now. And boop, this is this position. It's up about 150% right now. And so get rid of view. TP1 target is right here. And that's because we're taking into consideration this completed correction scenario. Like I said, this is the beautiful thing of having these multiple scenarios on the Elliott Wave Theory, is that it gives you a bit of context for how to trade, because now you can move a little more defensively with your position. Me trying to hold this entire position to assuming that it's this X wave scenario is a bit it's ambitious, right? And honestly, whoever holds the full position size to the bottom will get more reward out of it. But I like winning in all scenarios, so I take profits early at key pivot areas, typically the areas where I would probably long at, right? So as soon as price comes down to this TP1, or sorry, to this GP, sweeps all these major lows here and reclaims to the upside like that, I will assume that, that this trade might lose. So I'll TP1. And that should just give you an idea of how I like to trade these things. And you don't have to trade this way, right? Because you can really just hold most of the position size and get a better trade out of it than I would. But I like to make sure that I don't lose. So in the case that this is the scenario, this impulse structure scenario, then this bounce off the GP is just going to go straight to the upside. So my short will get stopped out, break even. So that's why it's important to, for me to take profits here. And there's a good shot that this short holds. Oh, excuse me. And if it gets stopped out and it comes up to the 786, then whoop-de-doo. It is what it is. I'm going to tell you that there's a volume profile right here, a POC of this range that price can just stall at. So that's something to be aware of. The other scenario I want to talk about is this one. Get rid of this, which is the deeper correction scenario, which is my top scenario right now. This X wave that we've seen here has been very complex, and that's because it's kind of a 5-wave move, and this is why the two scenarios are pretty closely tied, and the probability for them is pretty much the same at this point. It's very hard for me to say, aside from bias reasons, why we're going to get more of a pullback, and also the fact that people were buying up the rumor of the Fed rate cuts during this whole run up. So this is a bit of a 5-wave move with a lot of corrective overlaps throughout, which leads us to believe that it could be one of these triple correction moves, in which we have and I learned recently that these triple corrections, the W, the Y, and the Z, they all have to be simple zigzags like this. And that's kind of the move that we're getting, right? And this is why, another reason why this is kind of the peak scenario right now is because impulses have the law of alternation to think about, which is that the difference between wave 2 and wave 4, right? I talk about this all the time. Wave 2 and wave 4 have alternate correction types. So wave 2 could be a zigzag and wave 4 could be a flat. And in this case, we have two shallow corrections. We have a triangle for the X, right? We have like a contracting triangle for X. And then this next X wave here is a flat. It's an expanded flat. So those are two shallow corrections back to back, which is a pretty interesting piece of evidence for why this is probably not an impulse. And that's why I have and that I'm gonna now move forward into this. I have a long open as well on the micro time frames right here, which is looking pretty nice. It was previously at 50%. Now it's probably sitting at around 80 or so. So this guy right here, like I said, now that, because we have these two scenarios on board, it tells you how I'm going to play this. So I'll TP1 at this GP, assuming that it's the worst case scenario. This is just the safest way to play this. And if it doesn't, if price actually continues to the upside afterwards, assuming it's this scenario right here instead, then I get my trade to run the full profit, which is at the full TP, which is at this volume profile POC right here, the one that I drew over there. And so may leave a little position running. It may be wise because there's a 786 retracement a little higher up, and Bitcoin does like running these fair value gaps and dipping into the 786. It's kind of what it likes to do. So even this trade is a 786 retracement trade that I made. So it also aligns with some trending structure. It should. Let me see. Yeah. So if we get something like this, where price impulses to the upside for this final fifth wave of this ending diagonal here, then we get a move up into the 786. You wick it, and then the price comes down for wave 2. And so it'd be wise to leave some of the long running after taking profits. to see just how how much more we can squeeze out of it. But nonetheless, I hope that gives a great idea of how I plan on playing this range that we're going to get very soon, because it's very unlikely, in my opinion, that we're just going to see this go straight to the upside. It's just, I don't think that that's just how that works. So this is just not happening. We're going to get a pullback, and maybe it bounces here, maybe it bounces here, and only time will tell whether it shoots to the upside towards all-time highs right after, or it comes down for much deeper, shallower retracement targets. So either way, I'm in 3 winning trades. I feel pretty good. I'm also sitting on Ethereum. I shorted from the absolute top, and I feel great about it. Right around there. I've taken profits at this GP right here. As you can see, that's the GP. I've taken profits right there. There's some trending structure. So in the bullish scenarios, ETH comes back up and stops me out, and then it comes down and forms a wave 2 perhaps, which could end right here. But in the more bearish scenario, ETH will come down much lower, and so my final target price is around this 3,300 range. It could come down, frankly, it can come down further to like this 2,800 range, right where the swing high is, and that could align with the 786 perhaps, give or take. But I'm gonna play it a little safer, and I'm gonna shoot for this zone as my full TP. I'm gonna take a slight TP on a swing failure of this, just for those bullish scenarios that I mentioned, where it could just come down, reject right here, and then go to all-time highs right after. And so this is something to be aware of. Either way, I'm printing, man. I'm printing. So let me give one last thing, just to bring it home why I feel this way about Ethereum. So Ethereum, if we get this chart where we're comparing the price of Ethereum and Bitcoin against each other, I may have to go to linear, the logarithmic for this. So now you're starting to see what's happening, right? Ethereum ran against Bitcoin quite viciously, and which pushed Sol to the side. Solana hasn't really been running as much, but now it is. So while Solana's running, Ethereum isn't, because it's meeting resistance right here. And so if we start seeing Bitcoin outpacing Ethereum in the short term, then that means we get a much larger pullback on Ethereum. And a much larger pullback on Ethereum means that we're coming down, way down to like this 2,800, 3,300 area, if not even worse, right? So something to be aware of. Ethereum, for example, this POC, this is like the worst case scenario, comes to 2,500, but I'm targeting the value area high of this POC, which is just a little bit more of a kind of like a POC of a local range, if you want to call it that. And so this is like my main target, just above 3,000. So yeah, pretty much. These have been some long-winded videos, but this is kind of what happens when you have to consolidate everything into just a few minutes. So I hope that clears things up. Hope that makes sense. Hope you guys are killing it out there, because these trades, I have a feeling like people are gonna get wiped out very soon. So yeah, peace out.